Good morning and welcome to my YouTube channel. My name is Phil Grandy, philsgang.com. Also my radio show, philsgang.com. It's now 10:26. We're in the heat of earnings season. We're starting to see where the tech stocks are starting to weaken, which tells you the economy's weakening. Now, they're not going to tell you the truth going into the election. The economy is really weakening because we have a liquidity problem. What does that mean? That means that there's corporations, large corporations, they need money all the time. So what they do is they sell their debt. And they go to the bond market, and investors will buy their debt, and the investors get a bond in return. But it's not happening anymore. It's drying up. Investors don't want to buy the debt. We also can tell the banks, the credits are getting, and because of that, that's why you're starting to see mortgages go up to 7%, the fixed rate mortgages. And you're going to see business loans are really going up. When you have the Fed rate, which is different than the 10-year Treasury, okay? The Fed rate is the rate at which a bank will loan to my bank, and then they'll loan to me on a car or whatever, okay, and the rate I pay. That Fed rate is almost doubled, okay? It's gotten, that's terrible. And so with liquidity drying up, credit is getting tougher, meaning to go in and try to buy a house and go get a mortgage, tough to get a loan. We also have a big problem with all the subprime cars that are out there. The delinquencies are incredible, historic high. They get even during the good times, they're selling everybody cars, and as long as they could breathe, they could buy a car. So what you're hearing is how the market is very it's very stable. Or yesterday they're saying that, and I'll play this cut for you because this is important. They're telling us yesterday how, well, here, let me just play the cut. It's the market's resilient. My ass.
I think what we see in the economy right now is a striking degree of resilience. As you mentioned, certainly that's true in the labor market, but also in terms of household.
That is so untrue. Your market, that's not true. The market is not resilient because we're having this liquidity problem, okay, number one. And also remember, inflation, we've had 6 rate hikes, and the inflation at 8.2% only dropped by 0.6%. So here's what you got to look at on your chart. Okay, again, the market is trying to rally right here, just like it did going back to the last earnings season right here. See that? So they always can run it during the earnings season. They run everything during the earnings season because they have the plunger team behind them. Every time the market pulls back, the plunger team interferes into the free market and makes sure they push the market back up. Okay? And that's what's happening here. They're going to push this back up no matter how bad earnings are. They don't care. They'll just push it up. But it's not resilient because just like what happened here, it came right back down. The same thing's going to happen here. As she goes up, she's going to turn around and come right back down. When you have a downtrend channel like this, downtrend channel, and the worst thing about this downtrend channel is you see this green line right here? When you take that green line right here, what is that? That's what we call the 200-day moving average. And when your stocks are above the 200-day moving average, above that 200-day moving average, that's a strong market. Okay, that's when you get big rallies, and you get big rallies when you have 72% of your stocks above this 200-day moving average. Do you know what we have now? About 20%. That's it. And here, and again, you can see here the stocks are underneath the moving average, underneath, and that puts tremendous downward pressure. When the stocks are above the 200-day, that gives you great support, and that's why you get these big rallies. We got just the opposite. So everything they're telling you is just a bunch of bullshit, okay? Sorry about the language, but it just frustrates me when they're telling you how everything is terrific when things are going to get worse, not better, all right? Now, it doesn't mean that you can't make money in this market. You can make a lot of money in this market. Matter of fact, you make more money in a market that's volatile than one that's not volatile. And so, again, the market's going to rally. It's going to give up that rally just like the last time. Okay, remember, it gave up the rally right here. This is the last earnings. They gave it right up. Okay, every rally, they give it up. It always comes right back down. Every rally comes back down. And this one here is going to go up, and it's going to come back down. But that volatility can be used to make money in the market. Professionals love volatility. So why don't you do this? The question now I've answered for you. What is the market going to do? It's going to go lower because we got a terrible, terrible downtrend. And with the liquidity drying up, you can't break out of this market. The only reason why we broke out of this downtrend right here, we broke up because we had tremendous liquidity. We broke out of the 2018 crash, we had tremendous liquidity. There's no liquidity to push this out, all right? So why don't you do this? Join my gang, and again, for 10 days, it's free, okay? And learn how to take advantage of this market and make money in a volatile market. Volatility is a great thing. It's not a bad thing, but it's only bad if you just sit there and listen to these fake business news network keep telling you, buy on the dip, buy on the dip. Are you nuts? How about selling short when the market goes down? Try that. In the first 10 days of Phil's Gang, you're going to learn how to short, as well as when do I really buy a stock? When do I add to a stock? That's what you'll learn in 10 days. If you decide not to stay with us, fine. That's okay. You're not committed. All I ask, if you start making some money from what we taught you, to just help St. Jude a little bit. So that's it for today. So now you know what the market's going to do. It's going to rally, and then it's going to give the rally up. So we're going to have volatility, which means it's a big money maker with volatility, as long as you know how to sell short. So why don't you join the gang for 10 days? It's free, and then we'll see if we can help you move forward, okay? All right, see you on the charts. I love volatility. You should too.